Hello, listeners. My name is Charles Scott. The program in which you're about to listen to is called Can We Talk? We come to you on a weekly basis. I'm here with my son,
Charles Scott Jr. How you guys doing today?
my co-pilot, and we're here to give you some information today, and hopefully it'll be something that you can use in your weekly planning and your monthly planning and going forward. Some of the things that we tell you are from research that we do, from being out in the field, the experience.
Real life experience.
Yeah, real experience that we get out here every week. We're out in the field week to week.
Every day. We're seeing it, streets, feet on the street, as they say.
That's right. And right now we're in, tumultuous times.
Some turbulence ahead and currently.
A lot of things are going on.
As we see, what did we learn the other day? CHFA is hitting 7%. And that's unprecedented.
But also, we find opportunities. What we do is we try and find the opportunities for you, tell you some of the things that you can do to prepare for what's going on, and also give you some advice pertaining to the economy.
Yes.
Even though, just to give you a little bit of background, I've been in the real estate business going on 38 years. I'm a broker, and we service the Connecticut area as far as real estate sales, but also what we do is we give out a lot of free information. We do a lot of home buying classes.
Yes.
We do some online classes, and this pertains basically to just giving out information. Whether you are in the market to purchase a home or sell a home, it's good to listen to some of the things that we talk about because it has to do with real time. You may not be even involved in the real estate investment side, but we're trying to give you some information because it not only pertains to what you're doing in real estate, but the economy, your spending. We're talking, some of our previous programs have been about the recession, inflation.
Remember what you said last episode? I like what you said. You said these banks can't make money unless and we were talking about different ways to get financing, whether it be owner financing, different methods. But today we actually have the name of some programs that are currently being used in Connecticut that will require, help with buying a house.
Exactly. As I said, you just mentioned that to me. Banks only make money if they loan money out.
Yes.
They don't make money just sitting in the bank gathering dust. When you make deposits into a bank, it goes into a savings account, or if you're paying back a loan, they put it into special accounts and they keep the money there. But that's not really how they make money. They make money by loaning it out and getting it in the hands of the people out there. Whether it's a business, if you're starting up a business, some banks do a lot of business loans. They love businesses. So if you're looking to put that money out there, and I was watching a program the other day, and it had to do with credit cards. Very interesting. The other night I was watching an entire program on credit cards and how they approve credit cards. Some of the do's and don'ts. Maybe that could be a good program that we could have as to how do you get a credit card approved. And I was really amazed at how much they rely on algorithms.
Yes.
In other words,
instantly approved. You put your name in.
When you put that information in there, all of us have been taught that someone's going to sit there and look over the information that you put on the application, and they're going to call and verify the information you put on the application, and then you get a call or you get a letter in the mail saying you've either been approved or rejected.
Exactly.
That's not how they do it. Very few applications are handled by a live person.
It's a robot.
It's a robot. Algorithm. It's all based on what you put on the application. In most cases, they don't verify the information that you put on there. They don't have time to call up, and the information can change. You could put down you're on one job, and 6 weeks later get another job. So they go on what you put there. They go on what occupation you're in. If it's an occupation that changes a lot and has a lot of layoffs, that's points against you.
Get a lower credit.
That's right. If it's an occupation that you put down that is stable and it's going to be, let's say, right now there's a lot of healthcare workers that are needed. So if you're in the health field, well, your application has points on it.
Exactly.
How long have you had your accounts open? How much debt do you have? All of these things that you put on that application for a credit card determine whether or not you're approved. You know how like many of them you see where they say, approve within minutes, just
Exactly.
submit the information.
You can also say some of that similar technology works with mortgages, what they call desktop underwriting, where
Exactly,
you
yep.
put your information in and then it tells you right then on the spot how much you may qualify for. Because in the end, you still want to get a pre-approval when you sit down. They really go through your credit and everything else in the background to see what you really can afford.
Well, not only that, when you apply for the mortgage, like my son said, you put the information onto your application. The mortgage originator feeds it into the computer. The computer will say either approved or rejected or approved with conditions. It may say, okay, we can approve this loan as long as that car note is paid off.
Yes.
We can approve this loan if an explanation is sent in for that delinquency, or maybe a letter explaining not only the delinquency, but to clear up 2 or 3 debts. So, but it's not a person sitting there making that decision, it's the computer making that decision.
Correct.
And so that's what they call desktop underwriting. Or he may put it in and may say instantly approved.
Yeah, very true. That happens also.
And you're going to see that more and more now, you know, as the companies look for profits. They can't expect to spend a lot of money hiring a whole lot of people overlooking everything.
And what we're also going to see is a lot of banks and financial institutions are going to be making programs, special ways for people to get financing that may have not been able to qualify for financing.
Which is one of the things that we're going to talk about today. We're going to talk about banks, as I said, do not make money unless they loan out money. When times like we're in now occur, they find creative ways to finance the deals, to put the money out there. And we went to a seminar recently, just this past week. One of the major banks in the area, they announced a new program, and that program, what was it called?
Ready to Own.
Ready to Own. That's a program, the bank has named it that, and they put it out there. And some of the bells and whistles of that program is a little over 4% interest rate.
Can't beat that considering what we're approaching now.
That's it. The average right now is maybe around 7%.
Yes.
And they're saying that they are going to loan money out at 4%. And it's going to be, I think, low interest rate, 3% up. Was it 3%?
Yes.
3% down.
3% down.
So that's a very good program that they have there, and also money towards the closing costs. So when you look at all of that, what are they doing? They're adapting to the marketplace. They want to, and this is a local, a local bank, Connecticut-based bank. You'll also find that when you're going out looking for a mortgage, a local Connecticut-based bank or a bank in your locale is usually going to give you more programs than a national bank, because the national banks, they've got to look at it over 30 or 40 or 50 states. They got to average everything out.
Very, very true. The larger banks, they have more clientele. They have to manage each state, different laws. So if they make one program for one state, it may be unfair to the other state. So they keep everything pretty much generic.
And this particular program is a program that's geared towards this locale. Matter of fact, that's why they had that seminar, is because they wanted to get input from the people within the area as to how to tweak the program to make it better. So you don't find this on a national basis where someone will come in from a big multi-billion-dollar bank and say, how can we make our program better for your area? They've got to analyze all 30, 40, 50 states.
Now, what people don't realize, these bigger banks, these national banks, when they get a mortgage from you, and when you get a mortgage from them, they're going to take that mortgage product and sell it to another financial institution. It becomes what they call mortgage-backed security. It goes onto the stock exchange, people invest in it, and they trade it.
That's right. So what happens is that if you get a national program, it has to fit their needs for all 50 states or 40 states, or the states that they're licensed in. Versus a local bank, they can gear a program to that particular area. Not only that, they can hold that loan in-house. They service the loan.
They service the loan. That
And that
means
was,
they take care of it.
yeah, that was one of the things that they mentioned to us, that they service the
They're not gonna
majority
resell it.
of their loans.
For the whole life of the loan, which is very impressive.
Very impressive. That means also that they have more control over the loan and that they can be more lenient. They can be more lenient because, and they have branches locally, you know, and what this was a bank that met with a bunch of individuals and realtors, and we were there, and, you know, they're saying, this is what we can do for you and your customers. For example, they said, we're local. If a person misses a payment or they're having problems on their job, they can come in and talk to us.
Exactly.
They don't pick up the phone, and you know how you get put on phone, you know.
Oh, you can't do that with these national banks. You'll be on hold for 20 minutes, 30 minutes.
And that's it. And that's not, that's longer than that.
Yeah, hours.
You get transferred from this person to that person, and this person to that person, versus locally, you know, you go in and you sit down and you talk to the person. Or you have someone that you can show what happened, and they have a meeting, and they normally are a little bit more compassionate.
Exactly.
So this is, like I said again, these are some of the things that we do to help our clients, and then are able to explain things to you, because we can get it on a real-time basis, right?
Exactly, because, you know, I mean, they're starting to advertise that Right to Own program, but we got the scoop on it last week. We bring it to you guys first, of course.
And that way there, if you give us a call, then we can explain that program to you. Again, you know, just in case you just tuned in, my name is Charles Scott Sr., this is Charles Scott Jr. We come to you on the program to let you know some of the things that are happening out there, to give you information that you may want to use in the future. You can call us for information.
Yes.
You know, does not have to be any sales involved. If you need information,
calls for information on real estate.
Information. We are your information source.
Yes.
For you know, some of the things happening within the economy. If you're looking to refinance a house, purchase a home, sell a home, whatever it may be, and no matter who you're working with, you may want information, you may want some advice, you can give us a call and we can help you with that. You have a wealth of information.
Yes.
I serve on a lot of different committees. I'm a broker. I just had a meeting earlier today. I'm on the board of directors of the local real estate organization. And we had a meeting this morning to discuss some of the events that are happening within the marketplace, and some of the things that are happening nationally that may even affect our area. So therefore, I am able to pass that information on to you, and that way you can get that information firsthand.
Exactly.
So that was one of the programs that we were just talking about. There's another program out there.
Time to Own.
Yeah, Time to Own.
Now that one people may have heard of.
You can explain that.
That one was on the news a lot, as you see, as we approached August into September. Right now, the program is still active. I mean, there's I checked on the website today, $4 million left, but they're getting more funding from the federal government, which are going to put in there. And that's going to be a very good program. It helps people pay up to $50,000 on their closing costs, you know, from people who are buying smaller houses to larger houses. And it's definitely a program that we have experience in. And if anybody wants to give us a call, we can definitely explain further.
And that's a program where, like I said, it benefits the banks to get the money out into the area, and it also benefits the cities and the states to create home ownership.
And there's a key word in that Time to Own, is forgivable. So
Imagine
that's
that.
very good.
And depending upon which city you're in, depending upon which census tract that you're in, and your adjusted median income, it's from $25,000 to $50,000.
Yes.
And this is money that can assist you in purchasing a home. So if you're out there and you're looking to purchase, give us a call. We can explain that program to you. That's a program that's actually being sponsored by the state of Connecticut, and the program is called Time to Own.
Time to Own.
Time. In other words, think of it this way. It's a time to own. They had money in that program before. Now they got more money in there. I think, was there $4 million left in that
There's
program?
$4 million left. It started at 50, so they're definitely going through it because it's working. People are buying properties with this program.
So you might want to, give us a call. We can explain that particular program to you also.
Exactly.
There's also another national bank out there that just came out with another program that's looking to assist people in purchasing a home. And they are basically, they have it where it's much easier for you to be able to purchase, much easier for you to qualify, depending upon your circumstances. But the main thing is we have these banks that are jumping out there, coming up with programs to assist people to purchase a home.
You can tell because they're seeing the climate of the economy. They're seeing mortgage applications are down. And they're trying to think of new, innovative ways to get people into the bank. And these programs work.
Yes, they do. They are trying to get people, like you said, to walk into the bank, to sit down with a loan officer. That's another thing that we find out. Some of these banks are more and more are tending to want to meet people one-on-one, sit down with them to explain things and talk to them. And you'll find that also more so with the local bank. And, a lot of times people ask me, well, what's better, a bank or a mortgage company? Well, there's pluses and minuses in both.
Very true.
And a lot of times it depends, number one, on your credit score. It also depends on whether or not you're ready. Some people are computer savvy, where they can go right on the computer, input all the information, apply for a loan, and boom, do the whole thing on the computer. Now, some of
Other
us...
people not so much.
Yeah, some of us older folks.
I would say, at least with a bank and it has a branch, you can walk in the branch, get the paperwork to their resident loan officer. But with some of these mortgage companies, everything's done online. You're talking to the person through email, through phone, maybe through Zoom, but they're going to want you to scan everything, email it, and make sure it's accurate.
Right. So you have to have a scanner or the ability to access a scanner to sit down and scan that information and send it in. And the biggest problem I find when people are using scanners, and this is another tip that we can give you, with breaking news, we have all of these tips out here. If you are applying for a mortgage and your bank asks you to scan information, your bank, for example, your bank statements, I think that's one of the biggest offenses. The bank will ask you to scan your bank statements in so that they can review them. And what do we normally do? We look in, we scan in the information, we see a blank page, and we say, oh, there's nothing on that page. We don't have to send them that page.
Send it to them.
Send it. The reason why you're sending a blank page is this. You know it's blank, but how does the bank that you're sending it to know that it's blank?
Yeah, they can be thinking you're hiding transactions.
They think you're hiding
They'll
something.
say page 1 of 3. You send them just 2 pages. They'll say, where's the third page at?
Where's the third? And you say, well, there's nothing on that page. Why should I send that page when there's nothing on it?
Exactly.
They want to know that there's nothing on it. So it may just have on it the name of the bank, but still, they can see that it's blank. So always sending, if it says 1 of 10, send them 10 pages.
All 10.
Don't send them 9 and leave the last page that's blank, because they don't know that it's blank. And this is one of the biggest problems that we have. And sometimes they may ask you for a transcript of your earnings. Maybe you tell them the recent story where...
Well, people sometimes get confused when it comes to bank statements, maybe paychecks and stuff. They'll send the front page which shows maybe transactions, but the other send the exact breakdown showing exactly every transaction. And I'll tell you the truth, a lot of these banks are saving money on paper. They'll send you a statement in the mail, but it's just a front statement. You have to go online and print everything out if you want the exact monthly statement. And sometimes people get confused when it comes to that.
And what happens is that when it gets into the bank and it gets into the underwriter can see where there was a deposit made of $5,000 into your bank account. And they can see where maybe you spent $3,000. And that's all they're looking at. But they may say, well, when did that money come in? Where did it come from? What's the breakdown as to how it was paid? Maybe they paid you. You might have told the bank, okay, I cashed in my 401k and I got $10,000. And then, okay, so they put down, you got $10,000 from your 401k. Now you send them in a bank statement, it only shows $9,200.
Where'd the $1,000 go?
Where'd the other $800 go? How do we know that's the same $10,000 that you got out of your 401k?
Exactly.
Because the numbers don't match. So now you're saying, but that's what I did. I cashed it in. So we had a situation recently where we went back and forth for almost 2 weeks.
Yes.
All because of that situation, back and forth. And it all ended up being, yes, the person put in for $10,000 on his 401k, but they took out income tax because he cashed it in early. So he took out 10,000. They took out income tax of 8,000. So they deposited 9,200 into his account.
Exactly.
So now, by doing the full transcript showing where all the money went, what the deductions were, now we were able to show them what actually happened, and they approved the loan.
Exactly. The bank just wants to make sure that everything has a path when it comes to the money. Where did it come from? What deductions? It's math. If the math doesn't make sense, they're not going to approve the loan.
Right. They're not going to approve the loan. Now, you might say, well, what difference does it make? The money came from where it was supposed to come from. But here's the catch. How does the bank know that the money came from where it was supposed to come from? Because if you put in for 10,000 and now you deposited 9,500, they could technically say, and this is what they're thinking, you took that $10,000, you went on vacation,
Yep.
you bought a new car, you spent all of that $10,000. Now you went out and borrowed 9,500 from a friend or somebody.
You didn't have the whole 10.
And you put that money into the bank. So how do we know the money you got out of the 401k is the same money that you deposited?
Exactly.
They have to see a paper trail and match it up penny for penny.
Penny for
If
penny.
it's 10,632 cents, they want to see the 32 cents.
Exactly. Or at least a paper saying where the 32 cents went. Exactly.
Exactly. Because as my son said, here's what happens. The banks, they give you money. They give you a loan or a note. Then they in turn sell that, in some cases, to another bank.
Exactly.
When the other bank opens that file up and they look, they want every single penny to match. They may be working on a profit of $1,000. And if they get in 1,000 loans a month, they don't have the staff or the time to call everybody up
Not at all.
and second guess. Well, you know what? This is missing $3. This is missing $5. How come this doesn't match? What's going on? If they've got to do all of that, then there's no profit in them to check everything. And what if there's errors and it takes them a month to figure it out?
Exactly.
They want everything. They want to open that file up, look at it for 2 minutes, put it through the computer, 100% everything matches. So that's why the banks insist on everything being correct. Because here's what happens. If everything does not match, the bank that sold the loan to the other bank has to buy it back.
Exactly.
The other bank can send it back to them and say, give us back our money.
The bank's going to say, wait a minute, you sold us this mortgage security and we're seeing some discrepancies. It might be there's more risk in there than what we thought. So that means it's too risky, you have to buy it back from us.
And we don't want any more of your loans.
Yep,
Keep 'em.
exactly. They build up a reputation of being the bank that just approves everybody.
So this is the reason why. What we're telling you here, it's like I've had customers come into the office and they may be complaining about this bank, that
Tell
bank.
them what they tell you.
Then I sit
My
down.
aunt from 2010, they got a loan. They didn't do any
They
of
didn't have
this.
to do any of this
Well,
stuff.
that was back then.
And they didn't sell the loans then.
Exactly.
The bank kept them within the office of their own bank. If there was a problem, they call you back down to explain it, and they make adjustments. Once they sell that loan, there's no adjustments to be made.
No being made.
It's done. Either they buy it back, or either they can't sell any more loans. It's a done deal. So that's the difference. Everything has to be exact.
And in the end, that's for everyone's protection. As you know, in 2008, we had a mortgage crisis, and there may have been some loans that were approved that shouldn't have been approved. Nowadays, things are very, I'll say, airtight when it comes to getting a mortgage approved. The math works, deposits, withdrawals, and that makes a safer borrower, which means we can avoid a housing crisis like we did in 2008.
Before we go, boy, time goes fast.
It goes quick.
Just when we start getting into the real good stuff. The state of Connecticut also has more money in the program to assist people.
Yeah, time loans getting more money.
Also with their mortgages, if they're behind on your mortgages, or if you're behind on your rent.
Oh yeah, Unite CT.
Unite CT.
Unite CT, I've been told, is getting $11 million more from the federal government, and that's going to be used to help people who are facing eviction or may need help with their utilities.
So as you can see, we're here to give you this good information.
Yes.
That's a good thing to know. So all of you out there, spread the word. There's more money that's available for people facing eviction and helping them with their utility bills. And again, they put $11 million recently into that program.
Yes.
So it had run out of money. There's more money there now. Get on the phone, call your friends, or if it affects you, get involved so that you can help get assistance with your mortgage or paying your back rent and also your bills, your utility bills. So again, like I said, we're here to help you. We're here to give you information on a weekly basis and to give you, and so that you can plan and to assist you.
Yep. Be sure to tune in next week, and we're going to go more into depth into these programs also.
So one of the things that we want you to know is that we want to put these programs together so you can look at previous issues. Maybe you can explain that a little bit. One of the things that we're doing to put them out there where they can go and see them.
Oh yeah, yes. You can always visit us at tristaterealtyct.com or give us a call. We're here to help.
Right. You can see the back programs that we have. And going forward, you may be able to use that as a reference. You can play them back. If you miss something on this particular program, or if you don't get a phone number, go back and tell your friends to look, spread the word. So until next week, God bless.
Amen.